morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE, and we have Brent crude oil trading this morning a little bit down, about a third of a percent at $68.05. And WTI $2 below that. You'd have to say a nothing to see here reaction from the oil markets to the OPEC Plus decision over the weekend to not only proceed with the accelerated supply that was expected, 3 months of their announced quotas last year, but what you might call a supply plus. An OPEC Plus delivered a supply plus. Omar Najee, derivatives trader, BB Energy. Why are you and all your colleagues in the oil market saying, what? Nothing to see here, move on?
Well, I don't want to belittle what, OPEC does because probably it's,
Please. It's Monday
no,
morning. If
but
we're
I
not
mean,
going to
it's
belittle something this
ridiculous.
morning, what are we going to do?
It's ridiculous. So the OPEC started to increase oil production. We're gonna flood the market, and they started to do it exactly when the market hit the low of 55.12. I mean, the market hit low 55.12, and OPEC saying we're gonna increase production. And what's happened? The market is roofed, right? Now, granted, there was a 12-day war and all this kind of stuff, but I think honestly, to expect that markets run on quote unquote supply demand. This is what I want to understand, right? So assume the market is run on supply demand. How do they measure it every day? And why is the price fluctuating like a million times a minute, right? It's not like they're saying, "Ah, this guy wants 1 barrel, that guy's selling two. No, wait. No, this one's three, the other one's four." Now, supply demand is something that people keep in the background. It's not that it's unimportant, but it's a lot less important than it was. The oil market is financialized. You've got geopolitics, you've got dollar, you've got basically the fiscal situation of the US, the money printing that we're going to see, the insane levels of debt, the needs of countries in terms of income and all the rest of it. So this kind of grandstanding and it's getting old. I mean, I swear to God, it's like watching somebody from 20 years ago. We will increase by 20. It's like watching the Communist Party. Nobody cares, honestly. I think on a scale of 1 to 10, it's about a 0.5. And you see the market reaction. My prediction is the market is going to go one way, which is higher, right? And if it goes higher, you've got to ask yourself, what's the point of all these, we're increasing. And not only that, but they want to tell the market that next meeting, they're going to do even more. And the market is going to care even less. So we will see. These are really important statements and the market sells off, or the market's just going to ignore it completely and head higher. I'm in the camp that the market's going to head higher. The market is too cheap. Every asset class on the face of this earth has gone up, every single one, no matter what you think about. It's very, very difficult to suggest that people are going to look at oil and say, you know what, we're going to start selling it now because everything else is going up. So we are bullish. I think the market goes a lot higher than where it is now.
Amina Bakr, head of Middle East Energy and OPEC Plus research for Kepler. Amina, do you think they'll be popping what they call Saudi champagne in Riyadh this morning? This announcement, not only have they delivered their third accelerated quota increase, but they've delivered an accelerated supply increase plus, and the market has essentially not fallen, which would be a natural sort of course of things. Your thoughts on OPEC Plus's reaction, or the 8 countries we're talking about that are involved in these supply increases? They'd be pretty happy this morning, I think.
There were a lot of warnings, Sean, that, I mean, if they do announce a really big increment, that we would see a big sell-off in the price. But the reaction, as you see, is very muted. And as Omar said, I mean, we're no longer just looking at the fundamentals here when it comes to price. Trading happens because of other factors and sentiment being involved in the financial markets and so on. So it's not just about that announcements around supply or demand. But saying that, I mean, there are still concerns. There are lots of concerns around the trade wars and the announcements that perhaps would be made this week. And I think that's putting a little bit of a bearish sentiment, which we're seeing in a number of analysts' reports from major banks and others, saying that this is still a risk here. Just one clarification on the OPEC announcement. This is not an increase in supply, so to speak. This is an increase in the production ceiling. So we are not seeing these volumes actually come into the market. Those 411, that 548 that we heard of over the weekend, that is not actual barrels, actual volumes that's going to hit the market. That's just an increase to the ceiling. And you are going to reach a point where a lot of these countries are going to hit their maximum capacity here. And we're going to start talking about spare capacity again and the lack of it. And as we saw very
Just if we
clearly.
take that point, I mean, if it's the quota increase, the production ceiling increase of 548, and it was last month, or the month we're in is they're doing 411. How much of that and how much will it be in August, do you think, actual new barrels?
Well, the previous, I mean, for May, for example, that 411, we saw maybe 50% of that actual production coming in. We might see 300,000, but it all, I mean, for a country like Russia, for example, for Algeria, they're reaching the point where it doesn't make sense for the, I mean, they don't have the barrels to produce. So we are going to reach that point where we're not going to have that capacity, and we're going to start talking about spare capacity again. And I'm sure there are going to be all the doubts again around how much spare capacity does the group have at a time where I don't think this conflict in the Middle East is entirely over. It's not the end of it.
Mukesh Sadhav, a global head, commodities markets, oil at Rystad Energy. Mukesh, perhaps the more interesting story over the weekend was the announcement by Saudi Aramco that it's raised its official selling price for its flagship Arab Light crude oil destined for Asia in August, rather than this sort of fictional quota production ceiling increase that nobody really quite can get their hands on. But you can certainly get your hands on when you receive a notification from your supplier, your oil price is going to be higher next month by X amount. Again, that would indicate confidence in the Asian demand story, that this is clearly appetite for this extra oil, at least that Saudi's selling. Your thoughts?
Great question, Sean. Before I go, let me build on what I was also saying.
Please.
I think we are too much watching the flat price. What you look at is really the crude structure has moved. 6 months ago, the curve was in a nice sword shape between 78 in the front and in a 5 years time reaching a 68. Now it has become a good hockey stick with backwardation really increasing. So I would say that yes, they will not bring all the barrels back. And this indication to the market that they are bringing a lot more barrels back is actually pressurizing the next 3-4 months, the curve. They can't lift the front end of the curve, Omar was mentioning before we started the podcast. So this is a way to manage the backwardation in the market and not let the market go near anywhere contango. The second point I would say, Sean, is that why they can raise the OSPs is probably out of the increase. Like we were tracking some numbers. I would say out of the Saudi Arabia numbers, maybe before this announcement happened, 450, 250 was going to their own refinery system and some crude burns. So it's not that all of the barrels will make it to the market.
Even the half of the barrels that Amina referenced that would make it to the market, even that half won't make it to the international markets because it's been burned
Correct.
for air conditioning needs in the Gulf states.
and their own refinery runs are going to increase. So I would say that let's not worry about the end user demand. I think the oil prices have become less immune to the end user demand. What I would say is the big worry, and worry starts with the W, that's the refinery W. What I mean by that, in August, the refinery runs from May to August will touch a high point, and then they will fall down to October by 1.5 million barrels per day. Then they will rise again by 1 million barrels per day. Then they will fall again towards the March, April in turnaround. So I would say that's the refinery worry, which is the W, which the OPEC is really looking at. And they will actually not bring barrels back until something big happens in the world of supply, where supply disruption happens. We are already seeing the 18th sanction package from Europe, which might ban Russian processing of crude oil because Europe doesn't want to buy the diesel made from it. Iranian, I would say, challenges still remain. Venezuela challenges still remain. So I guess that until something big happens in the market, which takes out more supply, the real supply is not going to hit the market. This will go into their refinery system. And the whole idea is to bend the back end of the curve in the next 3-4 months, because there is not much to lift in the front. And with that, yes, they can increase some of the OSPs to the Asian demand.
Omar, you mentioned in your earlier comment there that the OPEC plus supply announcements might, I think you reference, I know half jokingly, but ultimately some sense of its relevance, a 0.5 out of 10 of relevance to the market. So that means there's 9.5 of relevance in other buckets. What are the other bigger buckets of relevance to the direction of travel here? Are we back at a kind of a COVID era just because of the scale of liquidity? We just had the big, beautiful bill passed over the weekend that's meant to pump liquidity back, more liquidity, more debt into the American market. Is this just a sentiment ocean of liquidity market that we're seeing all the equities at records and oil will follow? Is that your analysis? What's that
Yeah, yeah.
9.5 that OPEC represents only 0.5 of? What's in the 9.5 buckets?
Yeah, so basically, the biggest thing is liquidity. So there's no way with all this debt that the West, US, Europe, and the little bits in Australia, New Zealand, Japan, all they're going to do is print more money, and they're gonna they printed more money in 2008. They printed even more money in 2020, and now it's going to be even bigger in terms of what they're going to do now, simply because the fiscal situation in the States is untenable. They've got deficits of $2 trillion. They've got a debt of 37 trillion and growing. They financed $9 trillion of that, and I think at an average of 3.3%. The market's printing 4.3%, and it's probably going to go higher above 5. So everything is unaffordable. They're increasing military spending, they're increasing tax cuts, the BBB, and they're basically the tariff idea, all this kind of stuff. So it's out of control, and it's unstoppable, whatever they do. What if the US came today and said, we're going to cut spending, we're going to cut the deficit, we're not going to have a deficit, we're going to have a surplus? That would change the world, but they can't do it, because if they said that they would do it, they wouldn't be elected. So nothing is going to stop the basically devaluation of the US dollar, the GBP, and the euro. It's only a question of what devalues more relative to the other. And since the dollar is historically strong, it's going to devalue more than the rest and against the rest. So basically, that liquidity story is enormous. And how do we know? Well, look at gold, look at equity prices. And when you look at equity prices, they're factoring in, price to earnings ratios that are huge, gigantic. And it's not because people are sitting down and thinking, well, really, we can value it and let's do the analysis. No, it's basically because, you have a bucket of cash. What do you do with it? If you stick it in your pocket, it's going to devalue at a massive rate. It's going to be cut in half in 7 years. Or you get that bucket and you splash it on equities. So once you do that, look at copper flying, look at anything that you want to look at. in terms of commodities in general, for the vast majority, they're flying. So again, the idea that somebody would come along and say, you know what, oil is going to go. I know that home prices are rising. I know rents are rising. I know that, air travel is right. I know that schooling is going up. I know that food's increasing. I know. I know the iPhone 22 is going to be even more expensive. The iPad, whatever, blah, blah, blah. But oil, which is an input to everything, is going to go down.
Well, it is
It's
going down. If you
painfully,
think of it, it's cheap as chips and the dollar's collapsing, so it's falling. Even though if the oil flat price stays the same and
but
and the
yeah,
dollar declines by 10,
Yeah.
15%, oil prices are declining.
yeah,
Uh,
the
I
low is
mean,
in.
Amina, you mentioned there, I mean, obviously the structural side of OPEC Plus, some countries don't, these quotas are fictional. They can't raise to meet new quotas that are even going higher next month with the remainder of the 2.2. Never mind all of the other capacities out there. My question ultimately, where is the cohesion in the group when you have so much fiction, smoke, and mirrors around the numbers?
No, I still think that there is high level of cohesion, Sean. I mean, given that these decisions are happening also so smoothly, that last meeting was just 10 minutes, right? So that just shows you that everybody was aligned, and it shows you that they'd had the conversation prior to the actual former meeting of rubber stamping the agreement. So unlike last time when we heard that Russia and Oman had proposed a pause, this time everyone was kind of aligned that they would go ahead with this bigger than expected increase in the production ceilings. And just looking forward from here, I think what the group is trying to do is just reset this whole baseline issue again, where you have, first of all, you need to get rid of the voluntary cuts. And second, you need to start looking at all the baselines. And this is what they're looking at. They're going to, again, engage with companies that would assess capacities of all the OPEC plus states and then set new baselines. And all of this is going to be effective in 2027. It's going to take them some time. But what we are seeing, what we're in the process of, is this reset. And for this to happen, you need to get rid of the voluntary cuts and get rid of the fact that we have 8 members here that are kind of, involved in these cuts. And then you have the other group members, which is part of the wider group. So getting rid of the voluntary cuts is part of that reset process.
Cuts on cuts with cuts and more cuts. My question to you is, as the head of Kepler, OPEC at Kepler, and one of the secondary sources for OPEC, what numbers do you put on the page when you're putting your reports into OPEC Plus?
For the secondary source assessments,
Yeah.
well, we have our own supply and demand forecasts, which is based on. I mean, we track all the shipments. That's one of Kepler's greatest strength. We see everything that's being exported. So we do our calculations based on that. We have our own methodology, and we only. I mean, this production is only crude and not condensate. So we have like a kind of breakdown. Crude and then crude and condensate. So that's how we come. We put our numbers together based on our strength here, which is tracking exports.
Mukesh, given the complexities here and where the numbers are, I mean, it sounds, at least while we're in this transition that Amina refers to get back to a baseline, to get back to really something that everybody can hang their hat on, because all of this sort of cuts that are 8 countries and cuts that are 5 years ago, and all it's I think the market ultimately, as Omar is pointing out, it's 0.5 of the 10 for a combination of reasons. One being because the numbers are just layered of confusion on top of each other. But where we get back to reality in Asia, the biggest importers of seaborne oil in the world still, demand there, China still looks solid. China's had a decent first half of the year, despite everything, and the outlook for the second half. They're navigating the Trump tariff war pretty decent. Your views of where Asia and China demand have been going and will go in the second half?
Sean, I would say that indeed, I would say that the tariff uncertainty and how China has probably negotiated and how India is probably also negotiating, demand is not where everybody had thought that the tariffs will kill the demand. So I think one factor which is very clear, we are not witnessing that. Yes, the demand is not where it used to be. China would grow probably in the similar smaller numbers of 200s or 250s, for example, and India even lower than that. So I would say that demand on the end user side, again, don't watch too much of the end user demand. I would say what we need to really watch is again the crude demand, which is really the driving factor. The other point I would also make, Sean, when we talk of demand and these numbers confusion, I think what is being stage is set for, let's kill the sentiment of non-compliance. Let's kill the sentiment of cheating. So let's increase the targets. For July numbers, our estimate was exactly what the target has become now. So it's not that they are going to produce more. The target is lifted. Once you lift the target, all of the bearish sentiment of the non-compliance, the cheating goes away. We don't talk too much about those factors. That's one. So
Well, now
take
it's
away.
becoming the opposite, like Amina mentioned, because now it becomes, can they actually reach these targets? Never mind that they're overproducing.
Correct. So I think they take care of the bearish sentiment. The second thing I would say is that from August to October, the demand for crude oil in the system, in the global system, will fall down by 1.5 million barrels per day. So they may have to cut again. Are they preparing to announce cuts? If they don't bring these cuts, the unwind, then the level they will have to cut will be even more. So this is, in my view, take care of the bearish sentiment, set the stage for the cuts again. Even if you look at the OPEC report, the call on OPEC barrels in the OPEC report itself is lower by more than 1 million barrels per day when you go from third quarter to the fourth quarter's period. So they are themselves, let's say the OPEC as an agency, a research agency, not the group, they're also calling. So I would say don't worry too much about the end user demand. As Omar was pointing out, probably there is some future demand coming into these months because people are buying ahead when the tariffs happen. So people are stocking up, people are buying more probably, and that brings the demand. And it's not exactly what people need now. People are buying a little bit of the future demand ahead. So don't pay too much attention to just the end user demand. I think I would say stick with crude market dynamics and supply demand. It can still help us figure out.
Let's go to the survey question today, which is kind of a statement that you either agree with or disagree with, which I sort of put to Amina a little earlier. OPEC Plus will be pretty happy with the nothing to see here muted response from the oil markets to the Supply Plus announcement yesterday on Saturday. Agree or disagree? OPEC Plus will be pretty happy with the nothing to see here oil market reaction. Omar, this is the beginning of another week in which there's still a lot of drama to play out. Most notably, the next thing in the headlines is the big tariffs, the expiry date on July 9th of the tariffs, the suspension of the reciprocal tariffs. It's nearly like saying quotas on quotas and cuts on cuts, but on the tariffs, the period of 90-day suspension is ending. We've had one announcement of some deal with Vietnam, whatever that was, worth. Your thoughts on that story resurfacing like it did in April to be quite disruptive to all markets, obviously oil included, but most notably the financial markets?
No, nobody cares about what Trump is saying right now because he's achieved absolutely nothing, right? So last week he was saying, I think on Friday, he said, I will give Hamas 24 hours. And if they don't agree to the ceasefire, blah, blah, blah. Hamas basically said no, and Trump is basically onto something else. So all these statements from Trump, I mean, he's been saying that we have a deal with Japan for I think 3 weeks now, right? So it's all theater. It's all like the Trump administration right now is looking like a circus, right? So it's going from
A pretty disruptive one, it has to be said. I
yeah,
mean, he
but
did
no,
get his big, beautiful bill through Congress, which is massive achievement. However bad it is, one might
no,
analyze, but
well, no,
ultimately,
no. It was. I disagree. It's basically something that he wanted to do, but he controls. He controls the entire political thing. He controls Congress. He controls the entire Senate. He controls House. He controls everything, right? And it was like a drama five said no, then two said yes, then blah 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 blah. So, and then not Trump, Musk exploded, and there's the New America Party and all this kind of stuff. Clearly, so if you look at the US, this big beautiful bill, Musk screaming, the tariffs, the Greenland, the Canada, the China, the I don't know what, all this kind of stuff is not something that's telling
Putin
you,
essentially telling Trump to go, to
exactly.
leave him
It's
alone.
it's not something where America has, power, economy's doing great, military's doing great, hegemony's going on. Everybody's walking away. These are desperate times for the US, and people still don't realize it. The reason the dollar is selling off is nobody wants to hold it anymore, or a lot less than people are divesting from US and US assets and all the rest of it. Why? Because if you want to go to visit America now, you have to show your social media posts. And even if you're a naturalized, US citizen, they can revoke your citizenship. I mean, you can forget. I mean, if you told me that this would happen, this year, 2025, the first 6 months of Trump's presidency, I would have said you're nuts. But it's all like a movie, a circus that's going on. And it's like you see one arm dropping off, one
Why
leg
isn't
dropping
that
off.
bearish? Why isn't that bearish, given that this
Yeah,
is the biggest economy in the world, it's the biggest oil
because
consumer in the
be,
world?
because they keep, so it's like a train that's going to derail. And the only thing, instead of putting on the brakes, the only thing it can do is go quicker and quicker and quicker. There is no doubt it's going to hit the wall, and in a big way, which
Well,
is what the
you
new.
read Ray Dalio's new book, you'd want to buy lots of canned beans and dig yourself a basement.
But
Amina Bakr, busy week for you as always. Every week's busy, you say, but OPEC Plus meeting this week. The OPEC International Seminar. I presume some Plus people will be there, but ultimately it's a every 2 year event. But most notably, it's the first time, and I can't remember, and you can remind us when the group last met in person. So just the fact that they're meeting in person is quite unique these days. Your thoughts and expectations from this meeting? It's obviously coming now after these multiple announcements and increases. What's the expectation for OPEC Plus? A nice gathering, some nice glasses of wine. Is there any news value here, do you think?
I don't know about the wine, but yeah, it's a nice
The wine's never
gathering.
good. It always gives me a headache.
It's a gathering for sure. I mean, this isn't a meeting, as you said, Sean. I mean, the seminar takes place every 2 years. It's happening on the 9th and the 10th. I hope that you're joining as well. I'm
Yeah,
sure
yeah.
everyone will be there from the IOCs, from the industry, just in general. So it's a good chance to network, catch up. There isn't any formal or informal meeting happening. Perhaps we'll see bilaterals between ministers, discussions, informal discussions around projects, and also a chance for them to meet with many of the IOC CEOs that are going. So talks
What do you
about,
think all your former colleagues on the front line of gathering the news, all our former colleagues as former coal-faced journalists, will be asking? What's that question they'll be poking in the microphones in their faces in the corridors?
well,
What's the
I'm
one
sure, I
question they
mean,
want
everybody
answers
wants
for?
to find out if the group is going to be returning the remaining volume of 548,000. I mean, is that going to happen in one shot? Is it going to happen and divided by two? Are there concerns around the slowdown of the economy, a slide in prices? What price? I mean, the famous question is always like, what is the red line? Would you be okay with $50 oil? So I'm sure those are some of the questions.
Certainly, I'd like to know. I mean, looking beyond the 2.2 cuts, where do they go with all those other cuts that's still out there? And they're like something in the 3, 4 million. I can't even remember what they are, but it's certainly a big number. The question is, can countries even bring those back? Mukesh, your thoughts looking forward this week, the beginning, obviously, a new month, a new quarter. The idea that the big news of the tariffs coming to the front and center. The oil markets seem untroubled by that. But in April, we did see markets react quite dramatically to these events. The bond markets in particular wobbled on the idea that Trump would put a big rock into global trade. Your thoughts on the impact of this expiry of 90 days and the return of these sort of big national arguments around tariffs?
Good question, Sean. What I would say is that some more extensions, we should be ready to hear more extensions. I would say a lot of the slogans are not working out. I remember we started the year with drill, baby, drill. If I look at the oil rig count, it was 500 oil rigs in July of 2023. By
What about
March,
now, though, Mukesh? Were the oil industry waiting for the big, beautiful bill? Because there's a lot of gifts in it to the oil industry, a lot of regulatory removals and sort of green pathways to, no pun intended, black pathways, one might say. But they've been given a lot in this bill.
I would say, Sean, so, say if from the numbers point of view, 500 to 400, we have lost 100 rigs from July 23 to now. Almost half of the rigs, the rig count is lost in the last Trump months of it, right? So then there was this slogan around, let's fill, baby, fill. The SPRs are empty. And the big, beautiful bill had $1 billion, and now it was slashed down to less than $200 million. So I would say a lot of slogan shouting, but more extensions. And even when there is an impetus to, let's say, support the oil industry in the US, I think the big question is not just the push anymore. Who wants that oil? The WTI barrels are not the quality of the barrel the world wants. The world wants the barrels from the Middle East, the medium sour barrels. So Europe is flooded with the wrong kind of light sweet oil. US refining is struggling to run more light sweet oils. So I guess it's now US, particularly oil side, the shale side, is not a question of what you can do in the US. It's not just a push thing. There is no pull as well. And that's why he's trying to say, China, you can buy Iranian oil, but please buy some WTI as well. I mean, that tells me everything, that it's the pull is not there. So you can do many things within the big, beautiful bill, but you need the pull from outside, which
we have a good interview published this morning by a very senior Chinese researcher, Yan Yang Miao, chief strategist at one of China's big investment banks, who was giving a pretty positive and a view on the impact of the sort of Trump 2.0 onslaught to accelerating the transformation, the structural transformation of the Chinese economy. This is the impetus that was needed in which to make decisions that were otherwise moving a little bit slowly. So worth listening to there. Listen, have a great week, everybody. There's no shortage of things to be getting on with. Amina Bakr, as always, wonderful to have you. Safe travels to Vienna. Omar Najia, Monday morning. I wouldn't be able to do it without you. Mukesh Sadhep, thank you so much. This, of course, is our last week of the season. So I wanted to take the opportunity to thank you all for your contributions all through the 24-25 season. And we look forward to you rejoining us in September when we're back at it, and obviously our annual forum in Fujairah. So don't miss that. Mark your calendars. But thank you, Mukesh, Amina, and Omar, for your contributions this last season. Thank you, and have a great week. All the best.
Thank you.
Thank you.
everyone.
Thank you, Sean.